What we least expected may come at us sooner than later. Yet many people are oblivious to the plunge happening in Bitcoin cryptocurrency right now. Wherever you stand at the moment, here are 5 signs that Bitcoin crash will happen in 2022. 5. Bitcoin dip in market value. We are barely halfway into 2022, and Bitcoin prices are already facing a dropdown. The cryptocurrency dropped to $42,558.94 from its initial price tag of $43,921 on January 14th in a matter of days. However, it is currently at $37,994, which is by far a plunge worth $5,926.99. So be alert, Bitcoin crash is coming soon. Come to think of it, there are many reasons for the dip, and most certainly, one major explanation for this cause is the ongoing debate whether or not Bitcoin should be accepted or regulated as a currency or a security. Not to confuse you, but in the sense that it is secure by cryptography, making it impossible to counterfeit or double spend. What's more, the Security and Exchange Commission have, until recent times, stated that Bitcoin cryptocurrency cannot be a security, partly on the grounds that it is a decentralized finance with no person or company in control of the cryptocurrency's regulations. Aside the drop in value, Bitcoin is likely to fall because of security risks and some other uncertainties we promised to cover in today's video. So keep watching to find out. While we're unsure about the future of Bitcoin, check out our video on Best Metaverse Crypto to Buy Now. Top 5 Metaverse Crypto, so you have a fair idea which crypto to invest in next. 4. Fast rising selling pressure. Interestingly, this is an intense bout of selling pressure with Bitcoin crypto amid the drop in prices. Although the cryptocurrency has since recovered some of its losses and was last down by more than 16% at $47,693.75, there is a high chance of more losses as the selling pressure upswings. Note that the crash was triggered by the risk-off sentiment, that is, the sudden emergence of the global pandemic, COVID-19, that swept off global markets. With this speculative activity in the market, analysts suggested that much of the selling pressure in the Bitcoin market was on the cash side, which was intensified by the high influential positions on Bitcoin derivatives by traders. Unfortunately, the Bitcoin selling pressure is not over yet as more and more traders are eager to get the crash off their shoulders. 3. Concerns of the financial markets. Unluckily, there are regulatory concerns in speculative areas of the financial market about cryptocurrency trading. What you probably don't know is, there is a strong debate on the legal endorsement of Bitcoin in some countries, as some believe that government should promote the development of cryptocurrency within their countries, whilst others view Bitcoin cryptocurrency as a threat or as a conduct of illegality that should be restricted through strict laws and regulations. China in headlines have already made cryptocurrency transactions illegal after ordering the shutdown of Bitcoin mining in Sichuan province, leading to the crypto market prices declining in market value. What's more, there is no telling whether the speculated concerns of the financial market on Bitcoin cryptocurrency is the actual truth, or they are demanding for the banning of Bitcoin for the fear of losing their investors to the Bitcoin industry. But one thing is for sure, either they embrace the cryptocurrency and maybe become correlators or find possible ways to either eliminate it in already established cryptocurrency countries or be banned from countries that it has not yet been endorsed or established. Bitcoin crash coming is very much a worry because lots of people are about to lose huge amounts of investment. Is there a way you think this could be stopped? Kindly share your thoughts with us in the comments section below. And don't forget to subscribe to our channel with notifications so you don't miss out on any of our new uploads. 2. The volatility in Bitcoin cryptocurrency. Volatility determines risk, and cryptocurrencies are the riskiest asset that one could put his earnings into. It's a must for businesses and individual investors of Bitcoin to have an interest in volatility of the cryptocurrency, and it has been stated by analysts that Bitcoin cryptocurrency is starting to develop high volatile rates, and therefore is important to note that a cryptocurrency fails to meet the requirements for being a currency if it has a high volatile rate. Volatility in the financial sector is defined as the statistical measure of an asset price, which makes it not entirely bad, but can cause a crash in the cryptocurrency market if not kept neutral. There is a likely crash of Bitcoin if necessary measures are not taken by the industry to minimize volatility in the industry. The 6-month bounce back after their crash last year was a good comeback, but more measures need to be taken for the Bitcoin cryptocurrency market to run smoothly. 1. Security risks of Bitcoin. The Bitcoin cryptocurrency, as stated earlier, is secured by cryptography for its transactions, but that doesn't mean there is no possible security flaw which could affect its rate and price. Also, the security of the cryptography does not extend to its investors from hackers. Hackers can and actually have been stealing Bitcoin by gaining access to Bitcoin owners' digital wallets. Note that the Bitcoin network cannot be hacked, but coins are stolen from investors' wallet literally every time. The Bitcoin cryptocurrency network will not be able to carry out its transactions without investors buying and selling Bitcoin, which is becoming hard for them as more coins are being stolen from their accounts each passing hour. Bitcoin crashing is no surprise to John Paulson, a billionaire investor who referred to cryptocurrencies as a bubble that will eventually prove to be worthless. There are signs that Bitcoin is crashing, and all that's left is for users to identify the wreck happening with the network. I hope you enjoyed watching today's video. Stick around to watch our next video on. Thank you for watching, and see you in our next video.